Hey, what's up, guys? I'm going to talk about AVAX in this video, or also known as Avalanche. Before that, this is just my opinion, not financial advice, okay? So AVAX is one of those coins that sits on a 63 in terms of rank on Coin Paprika. Crypto Watch is reporting as 86 as of now. This is always moving, so there is a lot of volatility, and this can shift. I know that an hour or two ago it was above 100 or something like that. So it's basically a coin that is listed on FTX, and it's still very far from the top 20 or top 30, right? So that to me also is signals that the market cap there is a lot of room to growth, despite the fact that we already had a nice week of uptrend rally, right? But I do still believe that we are set for more higher highs. Okay, so let's starting by taking a look at the weekly. And what I do here is, first I have obviously a nice uptrend according to the trend system that follows very closely price action. A thing that I can do now here is, for example, switch to the line chart and use this kind of mapping of a trend line here. So, and I'm using the channel purposely, and I'm going to use and connecting the close there, just touching slightly at those closes. And now I'm going to switch into the daily chart. And with the daily chart, I can now adjust the middle point to match more or less the price action coming from the daily close. And that's my basis. So it's kind of very wide. So this is kind of my basis for price action for the trend. I know basically this kind of channel is telling me basically the zone. Give me the weekly, give me more or less the zone of tolerance between the daily and a little bit of a buffer as well. So you see that daily is kind of pretty much here, also touching below that line again. So it's kind of fluctuating a little bit slightly below. I can extend that slightly a bit, but if I kind of extend to the maximum like this, and see that most of the price action happen inside this channel, so that I can use that as a powerful heuristics to decide whether there is still ongoing uptrend momentum based on a weekly time frame, which in fact the most dominant. So I have an uptrend flag scoring, and it's showing visible there. Price came back into the cloud, which represents 50% level. So all this range here is high probability support zone. So that to me, obviously, any zone inside this cloud is a buy zone to me, right? So, but I already have a flag there, so that to me implies that is a good time to risk an entry. And basically, the way to approach this is either I just long this and use my stop reference as an entry. So we're talking about 50%. And then target up. One way to use that Fibonacci and Elliott waves like to use for targets using a Fibonacci tool. We mark more or less a target zone, and we have a 77 as a hypothetical high probability target, right? I do believe that we are going higher, but obviously from a typical traditional way to target zone, that would be kind of a zone just to have an idea, right? We're talking about 87. This gives us a risk reward of 6 with a stop in this range. Now, what I can do to try improve my risk reward and maybe increase my risk, or basically just increase my position size with a tighter so I can do two things here, right? I can either to increase my risk and maintain my stop level. So instead of losing 1%, if price moves 13%, I can choose to decide to lose 2% or 3% or higher, depending on the risk aversion, but maintain that level. Or the other option is I want to reduce my stop to a closer location, but also increase my position size by maintaining my risk, right? Keeping 1% risk, but I reduce my my stop distance, which will make automatically my position size to be bigger. So for that, how am I going to do that? So I have an idea of where are the kind of the stop zone on a daily, but I can go now to the intraday chart here. And one of the things that we can do is, for example, I can switch to the line chart here and identify this kind of trend, right? So this is kind of a trend that was established, eventually was broken at this level. So I map this level here and map the zone where there was a break and a retest above the trend line. So that is obviously my resistance zone. And now we have the situation that indeed we see price action touching this line and acting strongly as support. So that to me, gives me another basis. So that to me, that gives me an opportunity to risk my entry and place the stop somewhere around this range, either below or at where I actually have a flag on a 4-hour chart, which I also have there. But we see that this time frame is producing a lot of conflicting signals. But I know that the daily one is a little bit more stable and reliable, so that is kind of gives me a more reliable. But what I'm going to use on a 4-hour chart is not necessarily the candle flag there, but how I structure the trend breaking zones and map the support and resistance. So my stop, instead of being so wide like it was based on 90% above those levels on a daily, it would be based on the structure of this market trend, and in this case would be reduced for a stop of 3%. So I can choose in this case to maintain a 1% risk. If I get stopped, I lose 1% here, right? It's a tighter, so there is a bit of higher probability of getting stopped here. But if I get a deciding moving from here to break above the cloud, then I have a higher risk reward because my position is bigger than if I had a stop wider, right? So that's kind of different approach to do this. So that's kind of what I'm seeing at the moment. I think that now is a good time to risk an entry because it's really the part of the game. If we are really doing trading, we need to manage the risk and take these as a high probability trade. And if we get stopped, oh well, it gets stopped, a better opportunity comes. Obviously, I suppose that if we break below that level, there is a good chance under these circumstances that we can come back into the 31 range, which is the daily limit of the cloud, the daily cloud there. So this zone here is obviously a zone, is even more ideal entry zone, right? But for that, it needs really to break this support range, which at the moment it's looking like it's bullish, despite the fact that there is a negative momentum. But we see that in terms of trend structure from the candle is already signaling an uptrend over there. So, and if we take in consideration the daily chart, which is very bullish, so obviously we always should be looking for high probabilities entries into the continuation of the trend. And that to me at the moment feels like one, despite the fact that we could still see something like this happen as well. So a second time that it attempts to break the highs and then fails and then finds it gets into the cloud or the weekly level. So we have this kind of very important level here at the moment here to be broken to become bullish. So what we want to see here is for price to get above that level and sustain for this to have a high probability chance to meet the next target. Okay, so that's kind of the video avalanche. So hope you gave a good useful ideas on how to look into a risk distribution or a probability distribution. And yeah, that's it for avalanche or AVAX, and see you in the next video, guys. Take care.